Hey, good morning. Let's go over today's trade plan. So this morning, the main catalyst was the 7:30 a.m. employment report, and so far we're seeing pretty strong selling off of the larger time frame resistance up at 2105 quarter, which marked the all-time high. So overnight we saw a marginal break of that level and a move up to 2106, and then off the jobs report. So far we're getting a pretty decent sell-off down into the 89.75 to 92 quarter initial support zone. That's still an area where when the market gets exhausted into it, we can still see some responsive buying enter the market. Below that, we have the support at 86.75 to 87.75, which marks that high volume node, as well as yesterday's low. And then below that, 82.5 to 84.5 marks the recent short-term balance. And again, it's a spot where responsive buyers can be active. Now, we know heading into the open that on the smaller time frames, the sellers are dominant. But at the same time, keep in mind that by the time the market gets down into an area like 86.75 to 87.75 or 82.5 to 84.5, it's already sold off quite a bit and it's quite exhausted. So for that reason, buyers can defend 82.5 to 84.5 and they can be active on first test of pretty much every support zone on the way down. So we have to go into the open with the understanding that yes, there was a pretty strong sell move off that all-time high, but that doesn't mean that the market has to necessarily trend lower the entire day. Now it could, but for that to happen, we have to see some signs in real time. We have to see quite a lot of weakness on the advanced decline, and we need to see a trending AD line to the downside. We need to see the NYC tick holding below zero, and the price action to be bearish, not just in the S&P, but in the other markets as well. So in this case, because the sell-off is beginning at the top of a balance area, by the time it gets down to the bottom of the balance area, it's already too exhausted and it's overdone. And for that reason, we can still get buying on first test of the support zones. And even if we break 82.5 to 84.5, that would mark, a short-term balance breakdown, but the market's just so overdone by then that there may not be too much left beyond 82.5 to 84.5, and we can get buyers active at the support areas below at 75 to 77.5 and 69 quarters, 71.75, and that would mark a range extreme, right? So that's the thing. Even though short-term sellers have been dominant, we are still technically within a balance area. We are still technically trading within a range. We're simply going from the top of that short-term range to the middle at the high volume node or towards the bottom at 82.5 to 84.5. So from that point on, the market may just continue balancing. It doesn't necessarily have to continue selling off and trending lower. And for that reason, our short-term bias today is still going to be neutral. The overnight bias is bearish, the larger time frame bias is bullish, but the short-term bias on the day time frame is still fairly neutral, and we can still get both long and short setups on the day time frame. On the upside, the major resistance is 2103.75 to 2106. Now, in order to revisit that area, we would have to see some pretty decent buy response off of 89.75 to 92 quarter, and ideally we hold 86.75 to 87.75 if the buyers are really going to step in. But we could go even lower and then just continue balancing in a range. So in order for the market to trend down, we have to see some very specific things. Absent the downtrending AD line, the other markets breaking their respective balances, and a sustained downside momentum via the NYC tick holding below zero. Absent some very bearish situation like that in real time, we can continue to balance within a range today, and we don't necessarily have to trend one way or the other. It could be another range-bound session today. Given that we're heading into the weekend, we don't really have any major catalysts at this point. We have the ISM, non-manufacturing index at 9 a.m. Central Time, but after that, there's really nothing on the calendar that can serve as a major catalyst. So we may simply balance at lower prices and hold below 2101.75 or hold below 2103.75 to 06, but then just balance from that point on. So the main thing today is going to be, are we still in a very balanced environment, or are we seeing signs that are signaling potential for short-term trending behavior, with the understanding that the sell side is dominant on the smaller time frames. If you zoom out a bit, we're still trading in a range, and then if you really zoom out and look at the bigger picture, it's still a overall bullish environment, and we're still technically range bound on the larger time frame here. So those are really the main thoughts heading into the open. Let's see how the buyers respond at 89.75 to 92 quarter and 86.75 to 87.75. That's going to provide a bit of a tell, and from that point on, we're just going to have to assess how the market is shaping up in real time. So those are our main ideas. Let's see if the buy side can defend at the support zones today, and we'll take it from there.